I'm Anton, and I'm a climatologist, and chances are you might be too. Climatologists sit at the intersection of business and nature. They want to play a key role in minimising the human-led impact on the environment, but they also understand the realities of living and working in a modern, capitalist world. So if you too have pondered how we get to a future where clean, regenerative policy is embedded with profitable business models, the climatologist movement may just be for you. In this series, I'll be proving that climatologists are already out there leading the charge to marry their own good businesses with sustainable climate principles.
Now, if you're old enough to remember the early days of the tech boom, you'll know it was a time of excitement and endless possibilities. Silicon Valley was a wild west of fresh ideas, eager investors, and companies aiming to change the world. In 1995, Netscape went public, and that set off a chain reaction that led to today's giants like Apple, Google, and Amazon. Now, they're household names now, but 20 years ago, they were just ideas based in garages. Really let that sink in for a sec. Now, the early days of the tech boom gave us the dot-com bubble and later the burst. But they laid the foundation for the world as we know it, dominated by data, software, and digital infrastructure. Now, back then, securing startups funding for companies like Google and Apple, it wasn't easy. Investors were wary of these unproven ideas. Now in 2024, it sounds crazy to call Google risky, but it really wasn't that long ago. And the few that took that risk, they were massively rewarded. So what can we learn from this? As I spend more time in climate tech, I see striking similarities to early tech. This means that smart, well-placed investments now could pay off massively when the climate boom hits, and that's where today's guest comes in. Our guest on the Climatologist podcast this week is Martijn Wilder, the CEO of 5-year-old Pollination Group, an investment advisory firm focused on investing in companies driving the climate transition. Martijn and his 200-strong team are on the lookout for the Googles and Apples of climate tech. Just like early tech, securing large-scale climate funding is challenging, despite the multi-trillion-dollar potential of the industry.
The ability to really fund a lot of early stage solutions is very limited, and it's a real problem.
Many see the potential, but few are willing to bet big, even though that's where the future of growth lies. Now, once tech companies proved their worth, they scaled fast, and Martijn believes that climate startups are at a similar tipping point.
Anyone who tells you these things are easy, it's not true. It's a lot of hard work, a lot of time, a lot of effort, and we're just at the start of it, really.
And companies who don't move fast enough, they risk being left behind, just like Yahoo or BlackBerry. And there's already momentum. Private equity firms committed over $100 billion to clean energy after the Inflation Reduction Act was passed in the US. According to the International Energy Agency, 2023 also saw a record increase in the global deployment of renewable energy, growing almost 50% over 2022. Being an early mover isn't easy. It requires taking risks. And Martijn's vision to back climate-focused industries is exciting because today's perceived risks could become tomorrow's rewards. Now, early tech companies didn't just solve today's problems, they anticipated what the world would need in 10 years or 20. That's exactly what climate pioneers are doing right now, building for a sustainable future. Now, if we get this right, just like the tech boom changed our world, climate solutions can reshape our planet for the better. We've seen it before, and we know how powerful it can be when bold ideas meet the right people and the right investment.
We're going to set up, a multi-billion-dollar platform to invest in natural capital. Everyone's saying, what the hell's natural capital? But we're trying to pioneer that early, intentionally. So a lot of what we do as a business is like really out there on the edge.
Stay tuned for my chat with Martijn. Martijn, welcome to Climatologist.
Thanks for having me.
So it's great to have you here. And once again, actually for the second time today, I've got an ex-lawyer on the podcast. So I recently spoke with David Ritter, who's the CEO of Greenpeace. I promise this isn't by design. Now, Martijn, you've had an incredibly distinguished career in the law, in NGOs, government, academia, and now primarily focused on climate advisory and investment. And as I discovered just prior to us kicking off recording, the chairman of the National Reconstruction Fund. Tell me, before all of the mad profile and the incredible things that you're now doing in the climate space, where did your passion for the environment come from? Was it a deliberate choice to focus on that in your career?
Yeah, I think when I was young, I had a real focus on nature and the environment and also on animals. Actually, when I was going through school, I really actually wanted to be a vet. And I had done some sort of internships with friends of the family who were vets and had looked at doing that, and I was very keen on that. As I went through school, physics and chemistry were not my exceptional subjects, and those were the two subjects that I really needed.
Much the same.
To get into vet school. And in the end, I sort of ended up doing economics, not veterinary science. But I think while I was then at university, I also did a lot of volunteer work with the World Wildlife Fund and got quite interested in environmental issues and quite interested in sort of nature and animals. And I guess that's the migration. And that's sort of then, I guess, migrated into an interest more broadly in issues of an environmental nature.
Oh, we could talk for days about that. Let's talk about pollination. So, on the topic of pollination, one of my local cafes in Bondi is a cafe and a florist. We get bookshop, wine bars, clothes stores. They have an in-house barbershop. But I've never heard of a professional services firm that's also an investment bank. What exactly is pollination, and why did you set it up the way that you did?
So, I think in the beginning, when we set up Pollination, I had been obviously a lawyer, and I had a lot of clients who were coming to me saying, I've got this great idea. Can you advise me how to make this business work? Can you tell me what the right governance structure is? Can you tell me who the investors are to invest in it? Can you help me find a market niche, et cetera, et cetera? And if you do all that, we'll give you a little bit of legal work. Yeah, and we were not able to take equity. And increasingly, the amount of value that you were adding, it was pretty clear that to solve the climate problem, you needed to address that across multiple disciplines. And also, sometimes we thought, what, there's some things we could probably do here and connect advisory and investment and use our knowledge of the space to actually create better opportunities. And the opportunities that we did see to actually bring them in-house and build them. So that was sort of why we did it. I teamed up very early on with a co-founder of mine, Tony O'Sullivan, who's based in London, and we and this business panel went out and raised the money for it. But I think, it was very much the view that the dynamics in the climate space are such that many investors didn't understand them. They needed help to basically drive them. And so therefore, bringing to the market solutions for climate change, whether those are solutions for corporates who need to decarbonise, whether they're solutions for investors who need to invest, or whether it's building large-scale projects like in the hydrogen or the solar space, which investors can then invest in, because as a general rule, no super fund will really invest until it's de-risked. If we can produce things and de-risk them and present them to the market, then we're providing more solutions. So in some sense, I would say over the last 5 years, we've probably migrated more to calling ourselves a climate solution firm, but which delivers those solutions through advisory, investments and project development.
So if you were to say you advise, a primary type of client, it sounds like there's been a big shift from government, and there was a big impact on government and NGOs into the private sector. But now in a pollination context, who do you advise?
Still very broad. So our advisory business, we do advise governments on legislation and drafting legislation. That's a small part of the business. But the vast majority is strategic advice to large corporates, basically, and institutions that are involved in the climate transition.
And corporates that are transitioning, or corporates that are investing in the investing?
Right. So, corporates, so some of our clients will just say, we need assistance with how to decarbonise our business. We'd like you to tell us, we've committed to these targets. How do we do it? How do we, find a business that can help solve this emissions problem? It's that strategic advice. Others will say, we would like a whole strategy on nature, for example. Nature is a key part of our supply chain. It impacts our supply chain. We'd like you to help develop a whole strategy around dealing with that. And so that's some more of the work we've done. We've helped investors understand climate risk and nature risk. We've helped people develop projects. So it's a very broad strategic advisory practice. But then what we also tend to do with those clients is then work with them to implement the solutions.
As projects,
or through finding acquisitions, or through setting up a new business and fundraising, whatever it may be.
So how do you navigate that? That's like lawyers, conflict of interest. My last business was working with real estate agents who are notorious for playing all sides. So how do you navigate as a lawyer, as a former lawyer, I suppose, that conflict of interest? You're an advisor in some ways, an asset manager and a co-investor.
Yep. So I think probably Well, so first of all, there's more the merchant banking model. We work with clients upfront, jointly put capital in. We have first of all, we have quite clear walls between different parts of the business. So CAM, which is Climate Asset Management, which is our joint venture with HSBC, is a separate independent investment vehicle that's run separately, regulated separately, based in the UK. There are other areas where we used to give advice on, but as we've entered into those on our own accord, like venture capital, we've stopped advising on it. So we're very careful to manage those conflicts and make sure that doesn't happen. Also, we advise quite a few clients in the Australian carbon market, which is why we are not active in the Australian carbon market. So we're very careful about not to play where we would have a client who is competing with us.
Got it. Makes a ton of sense. Let's talk about growth. When I came to Australia as a junior lawyer, I joined Gilbert and Tobin. They're a blue chip firm that grew from 2 partners to a team of 400 and blue chip status in 20 years. Pollination has gone from founding with a couple of you to almost 200 staff with offices across Australia, the UK, and the US. How has
Singapore now?
And Singapore, there we go. the website needs an update. You're moving very quickly. How has Pollination grown so quickly since November 2019?
Yeah, it is a very interesting question because I need to reflect that we also had COVID in the middle of that, and so we set the business up. And when we set it up, we had a group of people who'd worked together for a long time. So there was a glue at the core. We had a book of clients who came with us, so we had that as well. We got going fairly fast. We then had, that was in 1999. In 2019, and late October 2019, we set up. We got going. We then within about 6 months, while the advisory business was humming away, got involved in discussions with HSBC on setting up a joint venture to invest in nature. And that discussion sort of just started just a few days before the sort of COVID rollout started to happen. And we went into this COVID period and we negotiated that agreement during COVID. Wow. The whole thing, no one had ever met. They were all in London, we were in Australia. It just was bizarre. The whole thing was done remotely. And so I think by the time we went through the first year and a half or so, we started with an advisory business that was sort of humming. We then got this investment business with HSBC that's now got $1 billion under management. And then we sort of started to build on other parts of the business. But it was, it's often, I sometimes reflect or wonder whether or not the COVID period was good or bad for us. But in some ways, I always said because everybody was in the same boat, we were able just to get on and do stuff, and it actually worked quite well. And we were still recruiting people in that period, interviewing people that were leaving one firm came to us. And you look back at it now and you think it was quite strange, but that did allow us, it actually allowed us to really concentrate the business and focus on it, doing it and growing it. And then I think from there it's just been progressive. And we've had, there's been a few things we've done along the way that we wanted to explore. They were false starts. We had to stop. We got to a stage gate where we said, look, we're not going to go any further. You experiment with things as you go, and some things work and some things don't. I think, but yeah, we've just grown pretty fast, and the market continues to grow, and there's a lot of interest in it still.
Congratulations.
And I would say it's not, anyone who tells you these things are easy, it's not true. It's a lot of hard work, a lot of time, a lot of effort, and we're just at the start of it, really.
That's an amazing mindset. And speaking of mindset, in the context of we talked about hiring, we talked about, people transitioning. There's a lot of people transitioning or wanting to go out of jobs where they're working for companies that aren't purpose-led. You guys are doing purpose and profit-led, which is super interesting. What kind of skills or mindset do you hire for when you're bringing people in? Are they in industry? Are they out of industry?
It's a real mix. We try to get a good, a really good cross-section of people, and we have a lot of people who come to us, and as we were talking about before, who come to us and say, look, I've had a whole career in doing investment banking or doing engineering or doing law, and I actually just want to now give back. And that's fantastic to see, but it's very hard to put someone with no subject matter expertise into a business very quickly. And just an important reflection, because you did touch on this at the beginning. So some of my younger staff have said to me, anyone who comes from a law or advisory or consulting or a background where you're providing strategic advice and you're doing that analytical process and you're following a sort of a process to do that, can very easily pick up a subject matter. People who understand the subject matter very well find it very hard to adapt to provide strategic advice. And it's a really interesting comment because I think, people who are trained really well and who are from a professional services background, often, this is more in the advisory business, have that skill set that's quite adaptable. At the same time, you'll get people who might have been in a law firm and says, I want to be an investor. You can't just suddenly become an investor overnight. You've actually got to have experience investing. You have a track record if you want to go into an investment business. So all those are different skill sets in different parts of the business. And then in our projects business, Rob Grant, who runs that business, used to be the CEO of Pacific Hydro, which he built in Australia from very early on with Gary Weaven and others. And that's that's a particular skill set that requires how do you do that at scale. And so, it depends on the parts of the business, but it's interesting to find people. The other thing I'd just make a comment on is that, and this is when you read a lot of the literature about fast growth firms, that's my own experience as well, a lot of people who come from big organizations find it really hard in a startup. Mm-hmm. So we have hired people from the big four elsewhere who have actually said, I'm great, I can do a startup. The uncertainty and the pace and the fluidity is often too challenging. They just cannot cope with that. And then there are other people who, as you go through and grow the business over time, will just automatically be great for one phase and not necessarily for the next. So in a really fast growth business, those are some of the challenges you have to deal with. I think anybody who has been through that cycle will tell you the same thing.
I mean, you've been through that yourself, right? You've kind of this 5-year period going out from advisory, which is fairly predictable. You exist within the structure, and you had to create the structure from scratch. That must have been a real challenge.
Yep, but I've also had great people around me who have been part of that journey and have played a key role in that. So, credit to the whole team. It's not just me. And I think that's also really important. But it is challenging because we are also, a lot of people came to Pollination because they didn't like the way big firms worked. And so therefore part of what we did very early on was create a value system and a culture of how we wanted to be. And it's very important that we stick to that and we continue to stick to that. But big law, big four.
Big anything.
Yeah, it's just you're trying to create a much different environment and also a much more nimble environment where you can make decisions quickly and move fast.
So on the topic of values, one of the values that stuck out for me when I was researching, or when the team was researching Pollination, was catalytic collaboration.
Yep.
Why that? What kind of organisations do you partner with?
So that is both internal and external. So the key to Pollination is these 3 groups working together. So not isolated advisory investment in projects. They have to work together and cross-fertilise and cross-pollinate, to use the word, and that's really important. So we get phenomenal insights about the market, which our corporate clients might say, this is a really important area, which may lead to the opportunity to do a fund. Or, for example, we have a client that wants to build an entire platform out in a particular type of energy. That platform can then be managed by the projects team. So it started as an advisory client, ends up as an investment. That collaboration is really, really important. And then also people cooperating in the firm is also really important. So we just did an acqui-hire of Sarah Barker out of Minter and her team. They do a lot of work for boards and directors around directors' obligations. And Sarah would also always say to us that I go to a board, I tell them what they have to do, and then they say, they sort of panic and say, how are we going to do it? And she'd say, well, I don't know, go find someone. Whereas our view here is that she can say, well, this is what you have to do, and tell them, they've got to basically start decarbonising or they've got declaratory obligations disclosure. They can then come into Pollination and get more advice from the firm. So the idea is to provide a much more of a fuller service than just a bespoke service. Some areas, clients, of course, will make a decision not to use us, which is fine. But other times, if we can provide that holistic service, that's better. And then I think also then the other part of it is the external part, and that is knowing, where do we not have the skill set or the capability, and we can team up. So the joint venture with HSBC was a good example of a global platform to invest in nature, where they bring the distribution side, we bring the expertise side, and we come together. And, and again, that is just to reflect on that, that was pretty hard in the sense of convincing the market we're going to set up, a multi-billion-dollar platform to invest in natural capital. And everyone's saying, what the hell's natural capital? But we're trying to pioneer that early, intentionally. So a lot of what we do as a business is like really out there on the edge.
How did that, so just before we move on to the investment side, how did that partnership come about? Was that an existing relationship? Did they approach you? Did you approach them?
Yeah, so Tony had brought on a senior advisor who had worked very closely with HSBC. HSBC had said to him that they have a large asset management business, but they wanted to present something to the market that was different. Do we have any ideas? And so they already had asset management enterprises in things like renewable energy and in a whole range of different areas under their asset management business, but they wanted something that would make them distinct and help position them in the market for a new space. So the thematic that we came up with was basically natural capital, and we had a team of experts in it. So that's how it came up.
Right. Well, we'll come back to natural capital. I'm really interested to double click on that. So let's talk investment.
Sure.
There's a lot of noise made in the investment community and in the climate community about needing to spend $2 or $3 trillion more each year for the next decade to get to the transition. I've been in the space for all of 4 or 5 months, but the more time I've been spending with founders, the more I've started to realize that getting the money deployed, even if it's willing, is actually pretty complicated on the ground. So when we think about hydrogen, biochar, new battery chemistries, heaps of new technologies, many industrial plants are first of a kind. They're not always price competitive with the products they're replacing, meaning that they need to take risks on market share. They also need a lot of money, and coming from startup, there's going to be a lot of failure to get to scale. How do you invest in that climate? Who invests? Like, there's a massive reward, but also massive risk.
So let's make no secret that this is a real problem, and this is really, really hard. And you speak to anybody in Australia in particular, and they'll tell you how hard this is. People like Mick Liberius from Climate Salad had written, it was in an article the other day in the Fin, just saying it's almost impossible to get venture funding. So we have this huge pool of superannuation money in Australia, doesn't want to take any risk, doesn't want to invest in things that are really early, doesn't want to be particularly innovative. There's very few examples of them having done that, other than perhaps I think it was Cbus who invested in the offshore wind in Victoria. But as a general rule, that capital is not investing in Australia in the early tech climate solution space. The people who have invested in that space, ironically, are the Canadian pension funds who invested in things like green collar in Australia. So we have seen some of that investment. But as a general rule, there's a dearth of venture capital funds in Australia. There is a couple of dominant venture funds. New entrants cannot really get funded, and therefore the funding towards startups is very limited. There's a huge amount of narrative, as you say, around the need for trillions of dollars to fund nature and trillions of dollars to fund the climate tech space. But as a general rule, that's not really flowing. Where the big dollars have flown are people like KKR and TPG and others who have set up very large climate investment funds, but the minimum check size is 50 to 150 million. They are often investing in things like renewable projects or other projects at scale. And so the ability to really fund a lot of early stage solutions is very limited, and it's a real problem. So we have tried to, our nature and climate venture fund, which we've launched in the market and we're trying to raise money for, is an example of that. But everybody who has these funds in the market in Australia is really struggling to raise capital, and last year was a horrific year for doing that. The only government that's really progressing this aggressively is Queensland, who went out with a tender to basically put capital into new and existing venture funds, and we did get an allocation from that fund. But as a general rule, it's pretty limited, right? So this then brings you back to what is the role of government? And the government needs to play a really important role in driving investment into new industries and new technologies. And, we have a little bit of that in Australia, but not enough. And so, what the US is doing through the IRA is critically important. But, it's a real problem because, as a general rule, funders are really finding it tough to do this and to get capital to fund their businesses.
What's the solve? Do you guys have a view on it? I mean, you're at the forefront of this stuff.
So I think the solve is that, first of all, we have to basically get away from this idea that you can't fund first-time fund managers and you can't fund people who are trading a venture in a new sector which hasn't been done before. That does require some loosening of the reins on the super funds, who basically, as a general rule, have got pretty strong obligations of fiduciary duties in how they invest, and trying to actually encourage them or to change the law so they can do some more innovative investing. The governments, through organisations like the CFC and the NRF and others, will have to play an increasingly important role in backing some of these. But we just need to start creating a pool of early stage and venture capital in Australia and creating really incentives for that to happen. And we're going to have to be prepared to take some risk, right, and lose some money. And it's interesting, when in the States, when Elon Musk sends up a rocket and it blows up and he loses money, he says, "This is great, look what we've learned." In Australia, is a failure, you get crucified, basically. So there's also a mindset that it's good to experiment. And look, and it would be unfair for me to say that the big venture funds in Australia have definitely done that and made a lot of money on Canva, but we need to actually really make sure that we have a much bigger pool of capital in Australia that can invest in that space and get the government to encourage it and get some of the super funds to actually start backing it as well.
I saw an interesting article in the AFR recently quoting Mary Delahunty talking about the fact that some super funds are moving on this. Are you folks working with any super funds on this problem?
So I would say there has definitely been a change among the boards of some of the super funds who are encouraging their investment teams to look at more venture. But I would say that almost none of them are doing it.
Got it.
Except for investing in like the second or third fund of Blackbird or One Ventures or Airtree. And there are, some of the biggest super funds will tell you they will only invest a minimum of 150 million in the third or fourth fund of one of the established players.
Got it.
And those established players are not, by the way, doing really climate or energy. They're doing most of those VC funds have been in the tech or the SaaS space to date. So no, we don't have a huge amount of these. Even the other problem in Australia, to be quite frank, is also a lot of the super funds don't pay fees. So one of the first people who rang me when I became chair of NRF was Ryan Smith, who was then the vice chancellor of ANU. They had a very, very successful VC fund. That fund had generated a return of 22% to the investors. They were going for the second fund, and all the super funds who had invested were saying, well, we're not going to invest in this unless you drop the management fee to less than 1%, and that was uneconomic to run the fund. So these sort of challenges in Australia are significant. And, I would just say that at the moment, in my personal experience, while the super funds are, some of them, a very small number, are now quite interested more in venture. And there's one or two that historically have done some venture. As a general rule, the vast majority are not there.
So more change, there needs to be more change and a higher appetite for risk.
Yeah, and they need to be, to be fair to some of those super funds, I think they also need to basically, have a higher appetite for risk, but also be allowed to have that high appetite for risk, because the way that the MySuper legislation works at the moment and their fiduciary duties, they will argue that makes it very difficult for them.
Yeah, we won't go into my super. There's lots to unpack there. So let's talk about your overall investment strategy. So you've announced the 150 mil VC fund. You've talked about the $1 billion with HSBC, the nature-based investment fund, and you also invest directly off your own balance sheet. Is there a core hypothesis driving these strategies cohesively? What's the focus?
Yeah, so I think. So our real strength, obviously, and our area of focus is climate, nature, decarbonisation. The HSBC fund, which joint venture fund, Climate Asset Management, which we launched at the beginning back in 2000, that was really playing to one of our strengths, which was we had a view that, as you said at the beginning, all these institutions want to invest trillions of dollars into nature. But to invest in nature today, you can't go and invest in biodiversity and get an economic return. So you have to start somewhere. So our view was that we wanted to set up an investments business that would be able to invest in nature over time, but we knew we had to start with investing in regenerative agriculture, sustainable forestry, nature-based projects that were funded by carbon because there was no other funding stream. And just start to build that. And over time, hopefully the market will evolve and legislation will come into play that you can invest in nature. And in the UK and in Australia, you're seeing the Nature Repair Bill in Australia and other things that hopefully over the next 3, 4, 5 years will create the the mechanisms through which you can invest in nature and make an economic return. There is nature tech at the moment which exists, and you can invest in that. But as a general rule, we wanted to create an investments business that drew the experience of our advisory business and our projects business and work with our clients to create investment thematics in those areas that are critical to resolving the climate crisis, and critical to resolving the challenge that nature's uninvestable. So what we're really trying to do in our investments business is not set up another solar fund or another wind fund as other people have done, but to actually start to our investment thesis is to focus on those areas that are particularly critical to climate and a little bit pushing the boundaries. So in the future, there are areas around adaptation, resilience, climate and health, climate growth that we'll be looking at and working with our clients on and rolling those out. And in some cases, those may be through funds. In other cases, we're setting up platforms that can invest directly into projects or activities in a particular area. So we do have a global platform that is looking at investing in nature-based, high-quality carbon projects that comply with the Paris Agreement in developing countries, and that's a way to actually save those ecosystems.
So nature sounds like big early focus, although there's some
industrial decarb as well.
A big piece. So. Natural capital, one of the first guests that I had was Andrew Grant, who's a friend of yours, I believe. Chairman of Tasman Environmental Markets, carbon credits. Big ups and downs, but still super important.
Yes.
What is natural capital? Is it just a rebrand of carbon credits, or is it something more substantial?
No, because so natural capital is about how do we invest capital into our natural ecosystems in a way that's far more sustainable and gets much better outcomes on biodiversity, water, soil quality, etc. So the initial fund in CAM is actually focused on taking agricultural assets that may be degraded and making those far more sustainable, bringing back biodiversity corridors, increasing wildlife, increasing water retention. So it's actually doing the activity that interacts directly with nature in a far more sustainable way. And then on the sustainable forestry, again, taking forestry operations that have to be done. I mean, timber is a critical commodity for the world. We need that, but how do you grow timber in a way that is less destructive for the environment and is better off? And if you can increase the rates of return of those activities by creating, say, some other economic driver, such as biodiversity credits or carbon credits, and those are an additional revenue stream that goes on top of those projects.
So do those credits exist? So you're talking about regenerative agriculture, or converting existing farms from old school practices, regenerative agriculture, sustainable forestry. Are there instruments that you can sell or monetize as a consequence of that, or are you creating those instruments as part of this process?
It depends on where you are in the world, but I think the most important thing is if you have a quite an old agricultural, we invest in quite an old agricultural activity, and we can reduce the nitrogen use, that reduces costs significantly, also reduces emissions. If we can farm it in a more efficient manner, if we can generate greater soil carbon in the soil, which means that the soil will be healthy in the water retention, all of these measures reduce your operating costs. So over time, the idea is to have a farming activity where you actually reduce the operating costs, and at the same time you're reducing emissions and getting a better environmental outcome. The ability to then say, if you were creating a biodiversity corridor, or if you were reducing carbon stock, certain jurisdictions like Queensland and Australia maybe in the future under the Nature Repair Bill, and then under the Australian government's carbon credit scheme, you can create instruments that have market value. And that's just an additional value on the rate of return that you're getting.
Right. So you think about this specific just in terms of, hey, let's buy some underperforming businesses that aren't using modern practices. Let's reduce the costs by implementing, sustainable or regenerative practices, and potentially let's monetize that by selling product to market that is green product.
Yep, basically that's part of it. Yep,
it's just good business.
It's good business, but it's also, it's hard because there's a huge amount of skepticism about all of this, and about ESG, and about regenerative ag, and about changing practices and getting people to change the way they do things. It's not easy, and it does, and telling people that you can make a return from nature is also not easy. So, if we can just touch for one moment on the carbon side, because I think this is really important. So there is a lot of there's quite a lot of opposition to carbon credits, and there's opposition to using those to reduce emissions. Now, if you put that argument aside for the moment, at the end of the day, if you're investing in nature, you're going to invest in biodiversity, you need a way to get a revenue stream. And so if we do want to get rid of carbon credits, if that's not what I'm advocating, but if that was something that people are arguing, you need to come up with a solution for the revenue stream. But at the moment, there is no alternative revenue stream. And so we have, very, very large projects overseas where we are taking areas that have been decimated. We are replanting huge areas of new mangroves to do that, bringing back fisheries, bringing back local communities. If somebody wants to pay us to do that, we're happy to do it and not generate carbon credits. But in the absence of that, your only revenue stream is that. So while people are critical of how you use carbon credits, we also collectively need to address the question, how do you finance nature-based solutions? How do you do it in a way that that can attract capital and get an investor a return? Because until an investor gets a return, they basically won't invest in it.
So are companies investing in that style of direct action? So we're talking to Andrew in the early days of carbon credits. There were no instruments. It was just, Qantas buying stuff to be done.
Yes, they were. Well, they were basically emission reductions that Andrew was doing, and then Qantas would buy them to help their passengers offset their emissions. So yes, they were voluntary carbon as opposed to the compliance markets like we now have in Australia.
Mm-hmm. And so is it, just to bring it back to the question, are companies now paying for that style of direct action? Is that so you're talking about regenerating mangroves? Is that something you're doing for countries or?
Yes, companies are paying for that, but they're paying for it in the form of carbon credits.
Got it.
They're not paying for the actual results for you to do that, except for philanthropy. So that's a whole other discussion about where does philanthropy play, where does impact capital play, and where does private sector investors play, and where does institutional capital play? Because those sort of high-level conservation projects, you can only fund them through conservation, through philanthropy, like WWF or CI or TNC will fund those, or alternatively, you rely on governments to fund them, such as national parks, or if you want the private sector to fund it, they're always looking for a return. And that return can only be paid through selling carbon. That's just the harsh reality of the situation that we're in.
Got it. Do you think carbon credits will be rehabilitated? There's been a lot of negative press.
I think the negative press is about. I don't think people have a problem with you doing an important nature project that reduces emissions and you measure the carbon and you've got a carbon stock. The debate is really, those who are against that don't want large-scale emitters to basically be able to buy carbon and offset all their emissions and take no action to reduce emissions. And that is a fair and valid argument. So the mainstream view is that all carbon projects have to be of high integrity. All corporates who emit should be doing everything to reduce those emissions, but there will be a residual amount of carbon that we cannot reduce. So we need to be doing a huge amount of activities that pull carbon out of the atmosphere through removals projects or through doing other carbon emission reduction projects and funding those to do that. Now, whether someone can then ultimately use the carbon credit for a particular liability is a whole other debate, but it doesn't get you away from the fact that you need these projects and activities to reduce emissions, because we aren't going to get there in the time that's fast enough to actually knock emissions out of the atmosphere. So we have to be doing everything we possibly can.
I mean, to be clear, I'm big in favour, fully market-based solutions. It makes sense that some things are going to be harder to abate. We have to move practically.
But we also need, you need a lot more of that. You need legislation requiring large industrial emitters to adopt technologies that do that. You need to have legislation that allows you to build transmission lines quickly. I mean, a key to rolling out renewables in this country is having the transmission lines, and the delays that we have on that is really problematic. All of these issues, we have to get faster and quicker at delivering the solutions and investing in them and bringing them to market. Because if we don't do that, we're just not going to get there.
And does that come back to a legal question?
Well, part of it is the stick, right? It's actually, you can encourage people through market mechanisms in one sense, but you also need to legislate and create people to do this. So, there are some if you legislated that every house in Australia must have solar on the roof and batteries, and you found a way to fund that, it would move very quickly, right? It'd be quite different. Or if you said that, and the New South Wales government had a law that all roofs in Australia could no longer be black, right? And now we've gone back to black tiles in many of these areas that are, quite a lot of heat. having really strong and good policy to drive all of this is really important. And then also having the government back those new industries, which they are trying to do at the moment, is also really important, because if you can't get private sector capital to fund it, you need to get the government to fund it. And there's a history in Australia. We have built different industries over time with government funding. Then there's a question about how does the government actually get a return on that capital they invest, and that's another issue. And the Norwegians have been very good at bringing that into a sovereign wealth fund. We have not been so good at doing that, but that's another whole debate as well. And how do you support people and the government gets a return on the resources which it owns in Australia?
And the way it's investing. Yep. So let's pivot away from government for a second, and talk about your share register. ANZ Bank is a major investor in the company. How did the investment come about? I know CommBank invested recently in Willamai. Is the bank dipping a toe in the water to understand the landscape? Is this one of a number of investments they're making in the transition, or is this a platform that they're then going to think about offering to their customers?
So when we were doing our Series B round and raising money, we were doing an international round with an advisor to find investors. The team at Pollination knew the ANZ team reasonably well, and we were having a side conversation with them on something else, and then this came up. We mentioned we were doing this. They had been through a whole review of where their focus was in the business, and they had a long history of doing sustainable green bonds and doing innovative finance, and a very good team that was focused on that. I think for them, they saw the opportunity to invest in Pollination as really a complementary partnership whereby they had access to a lot of what we do, and we could help their clients decarbonise, and together we could ramp up their activities in the sustainability space. And we have been working with them, with a lot of their clients around Asia and around Australia, as to how do we help them on the decarbonisation journey, looking at doing joint initiatives together. So I think ANZ, one of the key banks that is a very strong historical profile in this space, but I think all of the financial institutions realise that this is really important, and they're all focused on disclosure. They're all focused on transitioning out of coal, out of gas, and how they do that, and what their lending practices are. And they're getting a lot of pressure from the community that don't lend to support fossil fuel companies. So they're all going through a transition. And for us, that was something that ANZ was very focused on. And so it was it was a very good discussion. They became an investor, and so it was a very positive experience.
In terms of, so you just said helping some of their customers to decarbonise. Is that from an advisory standpoint, or is it some of the investment platforms that you're
that's primarily from an advisory standpoint, but it's also looking at innovative finance. So looking at how can people perhaps do a green bond, or how can people get access to finance from ANZ. And so ANZ have products, as do some of the other banks, where if you meet certain sustainability criteria, that loan or that lending platform is linked to the interest rate, and the interest rate will come down if you meet that criteria. So the innovative finance element's really important, and so I think that's also something that they've been very, very focused on.
Fascinating. So to round out the piece on investment, can you share an example of a project that best embodies Pollination's mission?
Sure. So I think there's two I would like to talk about. So one is you may have heard of what is called the ACE partnership. So we have a very large hydrogen project which we're developing in the Kimberley in Western Australia. That project is unique in that it's a partnership with First Nations groups. And so one of the challenges has been that First Nations groups and their rights and their economic empowerment has pretty much been ignored. So part of the ACE partnership was to come together with the 3 local land councils within the Kimberley area where this project is, and to form a company where we all have an ownership in that company. And we work together to build the project, and we use some of our balance sheet to bring that to market. And we're also working with Arena as well, who have provided funding for that project. And then once that project is closed, gets to financial close, we bring in other investors. All of the land groups and Pollination will all together share in that journey. And then take it forward with the investors and everybody else. I think what's important about that project is that rather than the traditional model where people will come to a traditional landowner and say, I want native title consent, and I'm going to give you a lease and going to do my project on your land. This is actually saying, wait a second, this land is actually owned by First Nations group. They are trying to get increased economic empowerment. They're trying to build up their their economic wealth. They're also trying to learn skills as to how to develop new economies. And so this partnership brings together that structure. And the really rewarding thing about, the partnership the Kimberley Hydrogen Project has had quite a lot of press. And as a result of that, a lot of other First Nations groups have come to us and said, how do we replicate this process? And that's led to other people besides us doing this as well. And you've probably seen in quite a lot of the government legislation, there is an increasing focus on economic empowerment to First Nations. So even in the legislation that governs the NRF, Section 17 talks about the need to empower First Nations people as part of the investment process. And ARENA has had as well ministerial direction about making sure that also focused on economic empowerment for First Nations groups. So that's a really important project. Another project we're doing is a very large nature landscape restoration project with our partners in Pakistan, who have been doing projects there, and it's taking a very large area of degraded land, restoring mangroves to those areas. That has started to bring back fisheries. The local communities are coming back into those areas. It creates a buffer zone to storm surges and to the floods, and that is a massive 40-year project, but been going for the last 15 years to actually restore these large areas. And it's, that will have a huge impact. And some projects like those are two quite different projects, but they're examples of things that we're doing that are really important.
Catalytic collaboration and action. So just for my curiosity, in that, you talk about a partnership in the Kimberley project. What role does Pollination play in that? Are you a joint venture manager? Are you
Yeah, so the company has 4 shareholders, of which Pollination is one and the 3 land councils are the other. And we bring the skill set to help develop the project. We also bring the balance sheet to start doing that in the first phase until we get to financial close.
And then ARENA comes.
Well, ARENA has come in already to help fund some of the feasibility work.
Right.
And then we will get hopefully overseas EPC contractors and buyers to come into that. So it is it's a very big, ambitious project, but it's also using some existing infrastructure in the region, which makes that a lot easier. And look, at the end of the day, one would hope that the project will work. But in a worst case scenario, even if we get a long way down the chain, we've actually will work with partners to create a new model, which is very, very important, which ARENA was also very focused on us doing. And we are in deep discussions already with overseas EPC contractors and overseas buyers of the hydrogen to try to make this work.
It's so interesting. This piece about First Nations participation in this transition is so important. Coming from New Zealand, Maori have done the collaboration over the last 30 years between Maori and the New Zealand government has been so different to what I've seen here in Australia. It's really encouraging to hear that some of these projects are playing out here.
Yeah, and I think this is a big, bold, ambitious project. Quite frankly, if we didn't lean in and do this from the beginning, it wouldn't happen. So it is pretty to give real credit to the whole partnership and the team. The vision to do this is pretty extraordinary and large, but it's really important. And why shouldn't First Nations Group be part of the hydrogen journey that Australia wants to go on?
Amazing. Again, congratulations. So one more question on pollination. So 2030, where are you?
By 2030, that's a really good question. By 2030, we hopefully the business will be humming out of that rapid growth phase. We will be. We'll have an investments business that is that has quite a lot of capital under management. We will have recycled some of the projects that we're doing, so we'll have developed them, sold them into market, put that money into new projects, proved up new models, shown how that can be done. We'll have worked with a lot of clients who are on the transition journey and have decarbonised, and we will also have done some quite significant joint ventures with those clients. To which we call pull through. We're pulling through these ventures with our clients, and we'll have actually created new ventures and vehicles and new technologies that will help decarbonise. Ultimately, obviously by 2030, we want a very profitable, successful business, as everybody does as they look at their businesses going forward. The desire is not to IPO. The desire is not to sell it, to someone who can, I guess, squeeze out of it.
Every last
cent. We're trying to create a long-term enduring business with really strategic partners and investors, and we're about to hopefully have another investor come in shortly, which is also quite strategic, and it is about having really significant impact on and providing real solutions with real partners towards the climate and nature crisis. Because if we don't do that, it won't have been worth it.
Final question. What opportunity do you think is being left on the table in climate?
I think just the biggest opportunity is that, and if you just bring this back to Australia for a moment, is that we do have this incredible position where we have great natural resources, we have a great ability to build new industries. And I think we just have to have a mindset shift here that is not we can't do this, but that actually we can do this. And if we work together, there are great outcomes for everybody. And, stop the sort of, I guess, the bipartisan politics, stop the no sayers, and actually think, okay, well, what's the vision we want to achieve? Where do we want to get to? And how are we going to get there? Rather than worrying about why we can't do things. And so for me, the biggest opportunity is vision. The biggest thing that we need to work out is vision and how to get there.
Martijn, thank you.
Pleasure.
Once again, if you like listening today, then please subscribe to The Climatalist wherever you get your podcasts and give us a follow on Instagram where we're just Climatalist. I'm Anton. Thanks for listening.